So we're waiting for liftoff on the British pound after we broke out this trendline pullback. And this might be retested back into here, so I'm putting buy limits at anywhere from the top of this all the way to the this internal top that became a bottom. So you see this over again, this pattern where when the market reverses like an Elliott wave, this is your C wave, or this is 3 is supposed to be the biggest wave in Elliott wave. So if this is a 1, 2, 3, 4, 5, that's a perfect 5. So, we can all we can all know what syncopation, like this would be a perfect Elliott wave right here. There's no doubt. It doesn't get much better than that. It pulled it back even to here. 3's got to be the biggest wave, 4 or 5. So on 5, the bottom of 4 should match up to something, and then you're going to go through a if this is 5, this is supposed to be A, B, C. C is supposed to be the big wave. If C is always the big wave, then you can still have the problem with Elliott is you can just keep having correctors. But here, if it comes down to here and you come into this and market gets to here and it does a triple test, you want all your orders behind the lines here and let it go into free fall into the limits, but as it's dropping, you're putting buy stops in on top. So you're kind of going with, you kind of have to go with the flow of the market. If you're still bullish here, and you're looking for the market to go up and hit your sell limits have to be here to catch the kickback to, say, here. So you're planning ahead all these kind of swings or these scalps, high probability scalps, where you figure a ricochet, once they get to the 100 and they trap the wick that comes back to this. So you just carry these forward, and they're usually right around the 100 pip handle. So if all your scalps banks are sitting up in here to just take little chunks off, but when you're trading right now, this time of day, just before the top of the hour, is when the market gets really frisky, and it's better to be a scalper and try to roll the punches at this point of the day. And maybe later on today, they're going to take it back into this drama here, where if you drill down a little bit on the 1 hour, which isn't too hard because there's only so many trades here on the 1 hour, you kind of filtered out of over trading. If you even bought this top become a bottom here because you thought, well, this is a doji, and you were going to do a thing like this where you're going to get long here because you've got your expectations are this channel, then that's definitely where there's a problem. But when it comes back, notice that little double bottom, that's when it kicks up to the double bottom and then it fails there. And that's the it happens quite often. It happens at least, there's 2 or 3 good pivots on the hourly per day. Actually, this is going into the next session. So in Asia here, it's a real subtle little rollover here. So even this little thing here, this doji here, so you got to believe most people or anybody with half a brain is like, okay, well, this is the channel, right? All you have to go on is the last known price pulse that took you up. So when you have this double bottom and it becomes a top here, in other words, people are like, oh yeah, it's still, but it stalls out at that, and wow, it just rolls out and just melts out of that thing. But if you didn't ride this down here with sell stop breakouts, and that's really the only way to get on that train if you're watching that happen, you had to have your sell limits up on that double bottom to get picked up on the sell limits right in here. Or you had this whole thing bracketed with buy stops that start taking profits, but those have to be trend based orders, because when you're risking this much, these things better be getting out like this, where your buy limits can be down here with a stop, and they just get out here. Just take a chunk. Like right now, all these orders here that are yellow, this is where it's going to get in. Here's the stops, and here's the take profits. And you just have an averaging of that. And you can get pretty carried away putting a million stops here, but the fulcrum is here, like the major. When the market plunges, yeah, it'll buy here, it'll buy here, it'll buy here, but when it starts to start buying here, it just buys a massive amount. And then you probably want to have a soft stop on that. Ideally, you're going to buy like this. Your stop's going to be, all these are connected. This is like 20K on one case. And here's your exits. So you can drop these like, trap orders. Like here, you could have said, well, I'm going to buy everything. This, there's a stop in there on the 4 hour, or the 8 hour chart, because this is like a little cleft back in here. So you're like, okay, I'll buy here for limit for sure, but I'm also willing to buy all the way down to right here with a stop here because, later on it becomes a fantastic trade, but just in case that happens now instead of like the next day, which some of these are like waiting for the other shoe to drop kind of trades. Okay, I got to buy at the market here. So I'm going to try to get into this, maybe a 20 pip pop in the British pound. So go back to real world here. So I have stops above, and I'm not looking to make more than just to this round number. Retest of this top. So we just wait. The top of the hour, there could be a big smash down. If there's news coming out, and I don't pay attention to that. If news comes out, whatever. Market trades pretty heavy into the news. Most of the money you can make on a real high probability setup is before the news comes out, the market will make a neurological move, coming back either to fair value or they're stretching it and stretching it and stretching it and stretching it. I mean, they're taking it into new highs or new lows, and then, wow, news comes out, or it's just in this treading water pattern before the news comes out. And in that case, I guess if you don't care about the slippage, you can just bracket it. The news comes out, it explodes either way. And if you've got the right amount of, this is why you probably want to figure out which currency, how many pips you want to risk, because in the end, it seems to me that if you don't want to risk a lot of pips, and this is like if you were trading corn or something, the safest thing you could trade probably in the futures market is corn, just because it barely goes anywhere. So some of these currencies, they barely go anywhere pip wise, and you can just get used to trading. Now, when you trade a wild pair and you're down 80 pips, that's no big deal, and but it is a big deal if you're looking to put a 20 pip stop on something. So you just, if you want to write a script that it risks 80 pips, it better make 150 at least or something, or 100. But when the market goes wild and the news comes out, you could be dropping orders with 50 pip stops. You could have 35 pip stops, stuff like that. But I just don't see the point in putting in a 200 pip stop unless you're looking to make 400 pips. And if that happens when the news comes out, that's a great trade. But I don't know if I'd have a pending laying out there with a 200 pip stop on it, because it's like, this ridiculous, right? You can't live that far in the future. So whatever's happening now this morning, like if you're in front of the screen, I guess you should, people say, well, you shouldn't scalp, but if you're on the 15-minute chart, the 1 hour chart, and you can see a setup, then just take the trade, I don't think it's that big a deal. I mean, if you're going to trade some insane lot size with a predefined order that's sitting out there, I guess you're just not in front of your computer screen. You don't have to be in front of your computer screen. I guess you could sit there and study the hell out of the charts. That's the other thing you could do in the meantime, so you don't overtrade. Just study the fuck out of the charts. But a lot of this stuff is pretty obvious. Like mountains and peaks. Like you could take just somebody off the street and get them trading very quickly. Very difficult to show mountains and peaks to somebody that Well, I guess you can get lost in all the possibilities of how to chart something, and next thing you know, it's too complicated. But what I try to do here is make a system that goes with current conditions, and it also goes with when the market's going to go spastic. So here, for instance, this whiplash here, this is 100 pips of whiplash here, and I'm expecting, okay, now this is a good setup here. Now it just pulled back on the 1 hour, and it looks like a great setup, but it doesn't mean it will be, because as the market's setting up and you think, oh, look, it's nice and quiet, it pulled back, it's right in fair value, that's really ready to go up here. I mean, it's ridiculous, right? Plus, if it takes out this peak, and we also have a small candle right now, so it's a low risk entry. You got a inverted hammer here. You got this kind of whatever. Here's your inverted hammer entry. Now this takes a little bit more guts to step in front here. You got to put a 20 pip stop on this, right? You either got to hit this, nail this at the market, sell inverted hammers, boom, boom. Like buy stops on doji. So every time you see this within a certain pip range, you just hit the damn button. It's stupid. Here's an inverted, inverted whatever hammer. Whatever you want to call it. This is just a doji, right? It's just baby bodies. Let's just call them baby bodies and giant bodies. So if you were trying to show somebody off the street, hey, listen, you see a giant one of these things, don't even touch this button over on the keyboard. When you see one of these little things, you could push buttons all day, right? Because you can push, say, low risk orders all day here, because you're not setting the world on fire as this thing crawls up and down these little things. But if you're stacking up 2 and 3 and 4 hour orders that are ready to get in on this, or you just have somebody place an order, you tell them you see a mountain peak, you just place an order at the top of that, a buy stop, or you put a sell limit up there. It doesn't matter as long as the ratio's right. But it's kind of obvious that, or you go like this, you tell them, hey, put a sell stop here and a buy stop here. Now that would be the bracket entry order. Or if this is a buy limit and that's a sell limit, then you're trying to play a game of like, okay, it's ranging, I'm going to come back to center. Problem is, at this time of day, just as it about open up in London and all this stuff, markets kind of formed a triangle, and there's going to be probably a ramping up of volatility in the next hour. We have to decide whether we're in a drift up thing and we're finally going to try to, just recover. But the problem is, in the 4 hour chart, there's still a double top that could be retested. And, you're always in scalp mode when it's quiet like this, because these short-lived things here. And this entry back here on the daily, if you're putting buy limits at this top, you actually came into this by just a few pips. But we're bouncing off this doji now. So there was a ricochet off of this, although the wick is very deep, so you really have to commit to buying this whole, when they come smashing down in here, in this part here, and this was Monday, it came down, if I get the zoom in right, this thing drives me nuts. If your first buy limit starts here, and you captured that for the scalp, and you had buy limits all the way down to here though, and even here, and maybe just a big buy limit here, and then you have your stop here, maybe you have a master stop, or maybe each one of these orders have their own ratioed stops. When it comes in crushing into this, and you get this symmetrical closing price here right in the middle of the road, and it's like, duh, go grab these guys, then come back. And then there's a failure to really do either way today, so we're still forming this triangle, so we currently are in this situation now. This is, I guess, bullish, right? It closed up, but you still could have if you're accumulating during this quiet phase, then when the jury comes back in, and of course, if you're just looking to make this many pips, which is all I'm looking to make there, this is a scalp to the to this what is it? 144, 145. $1.45. This sounds likely. And here's the $1.45.50, and then back to the round. But look at the doji, the perfect. Perfect hanging man here. Perfect doji right at the 100, right? So very conspiratorial pricing. Highly manipulated market, obviously, right? I mean, look at these people. Come on. They like everybody looks back and they're like, wait a second, where's the smallest body to the left? Oh, that's crazy. What's the chance of that? So if you bracket the bodies, take the doji and bracket that, and that's going to give you an entry window for the limits. You're just going to cordon off that zone. So this is so rangy here that it really drives a lot of people crazy. And now, I guess people are thinking, oh, well, here we go. We're finally kind of like, if this bottom holds, then we're going to go up another increment. We're going to start marching up this new channel here. If you go off the tops, you project off the tops. I guess the greedy projection would be something like this, where it's just going to start to go one of these megaphone things, and it's just going to go nuts. Certainly, it's a viable case on this that you're going to get back to this at some point, right? The last known bottom that became a top, right at the 100, and what are you going to do? This stuff just happens, and you have to cordon it off. Now, here was the classic break of the closing price, and it becomes the support zone down here. We ricocheted back to this. A lot of scalpers got in, but they could still retest. So we still come crushing back by Friday. You could be down. You could either be, obviously there's only two. If the volatility kicks up, it's either going to come down and retest this window between the bottom of that and here, or this thing's going to gather a couple. It's going to get a hammer going here, and we're going to come retest maybe the high of the day by the end of the week. So it's 150 pips, or we're just going to go nuts and extend beyond that. So if you're on the 1 hour chart, there's so many opportunities to get into so many trades there. And yeah, maybe it comes up to here. So obviously, in possible scenario basis, I got an indicator on here that's called 4exit, and it's hilarious. It'll actually do like, maybe it's going to go like this, maybe it's going to go like that, maybe it's going to go like that, maybe. And it's like, really? Okay, I'm tired. And then maybe it spikes up here and then rips back. But if it rips back, the buyers are going to come in here. So it's always going to be like this. Sadly, it's a zigzag game. And you just have to figure which zag you're on. And if it's worth riding, you scalp on the counter trend trades. You can scalp that in, but you got to be aware of the fact that, man, the big picture, at least this picture here where the daily came smashing up into this flat doji and perfectly turns around, sums up in, I'm in for the 50 pips, but I'm just looking to get out of here on the 1 hour chart. When we take this thing out with a little bit of a gust of wind, everything I'm going to get out is just below the big round number. So I'm just going to scale out up into that last known, and here on the 4 hour, it's still possible that we can retest this double top here. Just kind of a flash crash into that, just kind of like, sting, okay, we retest it, see you later. Just like, it's like, oh yeah, by the way, this thing, you came up into the body of this a little bit on this wick, but wow, look at the, so if we go crashing through these things on the way back up, this really is a big deal, this price. So if it just pops up to the round, and then I guess my projection off the top has to be, you don't really have a choice here either. You're just looking for the flick up into here, and for the down argument is that you're going to come smashing back down into this this here. You got to have retest in here, at least for a like if you're buying anything below this, your exit has to be that. point there. And if you're going to buy this top, even if in the end it's going to go up, you got to have something. You got to make some kind of money in here, because you can still carry this bottom forward. So there's a real cluster of, if it ever came down into this trap, it would ricochet quite a bit, because there's a real debate always at that price. You know, here this drift up, and then, yeah, the debate's over. Usually it's very much, but this is only 1 hour. It's 4 hours here. So after that, you've got to just be so crazy as to say, well, you know, this is 100 pips down here, right? So you're just going to buy it back. I'm going to sell here. So that's what everybody did. They sold here. Or they sold here, but they crashed through them a little bit. But this was the target for the guy that bought this double bottom, and realized that when they take this out, I'll stay for the ride at least to here, and I'll dump. But now they cut through. If they can bang it through there, now they come back. This is the new kind of drift into pivot. Then the idea here for the bulls is to clear up to that, ricochet back, and the bears can just scalp back to, say, this doji. But I don't want to extrapolate too far into the future, because unfortunately you have to get on this bull as it's kind of like waking up in the morning. So if a bear, you're trying to get in before when it's quiet, and then if you get the explosion, okay, you got the scalp, so you bank the scalp, but you know the vicious kickback's going to come, like you don't want to walk behind a horse, right? And you're going to have this backlash, and then that's also a trade. So if you're just trading one instrument, scalping, and but I guess you want to be aware of the fact that they can just plunge at 45 pips in just a blink of an eye and retrace 20. That's always going to be on the kind of like on the horizon, could happen. But then you have that kind of natural, oh, this market just looks like it's behaving like a market should, or not. In other words, it's quiet, and it's like, oh, here, I guess we're going up, I mean, and then you can see the hole starting to fill. So in this situation, the hole, there's still a big vacuum forming on the north side here, and they may want to fill all the way to here, so they'll start plucking you off these wicks and then kicking it back in, and the bears want to scalp back into this top. And but here's doji, so you're forced to bracket this with buy stops and sell stops, because if you don't care, it's going to spill back here, and you're going to scalp back into here. You'll make money on the breakout, but you also have buy limits down here, so you're going to trade it on the way to that place. And if it's usually a quick ride, then that's why it's the volatility breakout on stops, and the limits are the, say, like the kickback or the backfire, or I was watching this video, and the guy was talking about tail risk, and so you're actually taking advantage of the tail risk, the wick, the tail, so you actually have this kind of in other words, you're riding it as it's moving. You're running tighter stops on that, but when you have these kind of spaced limit orders, say spaced 25 pips apart, and they start at 50 pips south from you, and you got 10 orders in there all the way down 300 pips deep, and you have these kind of elaborate, I guess you call them schemes. It's kind of a template for a scenario. And then you also are trading at the market just like a good old-fashioned normal person, where you're like, oh, I guess they're going up, like duh. And 5-minute chart maybe, right? And you're just trading small, and you're building positions, or you're trading big. You have super tight stops on your 5-minute chart. But meantime, in the background, you just got these monster. Same thing here on the sell side. You would put monster sells up in here, looking for that ricochet, that whatever happens now, based on this is expanding volatility. I guess you could, without cheating, you're like, yeah, it's going to expand. So there could be a big rip up, and then you start selling up in here for the pullbacks. All these three yellow lines up here. Plus, if you figure they're going to go and start cutting into these top of these wicks and plucking off whatever. There's a doji right here. Like this would be the last thing on the stair step of the plucking off people's stops. This is a daily chart, for God's sakes. But there's still robots and institutions and people that start buying higher highs as it cuts back, obviously, or it's just a natural thing where, so people, think about a robot or a person, and conservative people do not have a chaotic list of stuff to do. So it's pretty much, you can count on the fact that once it starts to take these orders out, it's going to be just nothing but sheer logic, typical what happens, just like when it starts crushing down. I mean, once it starts cleaning house, and if you look, I guess in a deeper time frame, you're going to see, it's taking out, it's going where it's bully never gone before. But once it's satisfied in that manner, it's going to come, it's typically returned to where it came off the tracks. And here is where it came off the tracks, came back, and we've been there. So people accept that price as being valid. And I guess it's really about price acceptance. You're looking at people accepting, it seems like a decent price. And so if you zoom in, if you're only trying to make 40 pips here, it's pretty, you can make it quickly. But in the long run, this thing's it's insane. I mean, it's a 100 pip wick on this. It's 150 pip wick on that day. It's a hammer. It's a, so here you dial down, you're on the daily. It's either way here. But once they take out the high today, they probably pull it back. The scalpers come in above that round. So I want to be out before that. They come back, they nab it, they pull it back, and then it's time to think about these cycle plunge limits. And on the 4 hour, you can see if they do. Now they just took out the high here on the 4 hour candle. I can zoom in here on this, fix this grid. Here's the, so you just nicked the top of that. So I got to go to my other account here and put another buy stop in. And I just put so I try to make some keys have a bigger target. So here's the view of the daily. Ricocheted off this double top yesterday. And the scalp, the logical scalp is if you're going to buy here with a limit, you got to get out here. So you take about 50 pips out. This is 50, 25, 100, 25, 50, 25, 100. So it wouldn't be unusual to be able to come near this. But yeah, if they grab the high of the day in this little 5 pip window, sure, they could pull it back all the way here. I mean, they could just do what they did down here. It was just people just get all like, I don't know, up and down, up and down. These dojis, these are the easy entries. The only pullback in the whole thing. And so the sell limit guys try to get in here. I'm sure on a smaller time frame there might have been a ricochet inside of this thing. They go for another 75 pips, then another 50 on the wick. Doji out. This is kind of a high risk trade to just put sell buy stops in there. It's 150 pip risk. So that may not be up your cup of tea. So it looks like we're going up here, and I'm just going to scalp to the round here, and I'm going to try to get back in, and I don't want to chase it. A big explosion yesterday, covering this, filling this big void here. Really filled it pretty hard. And look at this big bear trap down here. Just before that happened, they built all the way back in that type become bottom and ripped it up. Wow. So now here's the kind of wave 4, or this is the triangle accumulation. Expect this to pop just above here. I'm going to start getting out. So I'm very, this is the low inside the top. This is the bottom inside the top right here. So this would be the first obvious target. But we could just go, if it's really bullish, we'll just go creaming through that. It just will ignore that. I mean, it'll just become, it's not that big of a bottom inside the top. So you really can't see this stuff unless you fix a scale and drill into this thing. But like here is going to be another obvious resistance as you're coming up in, but that was where the of course I'm in the half hour now, so there's more trading. But the nice thing about this one, this half hour skews to the half hour there. Plus you can find it too. It's hard to find the count on the wicks, so this is a pullback of half an hour. Looking for it to just clip the wick there, run to here. The sellers come in, then it comes back, and then you're caught in this kind of like, well, maybe you're going to buy every time it comes to this trend line. But this is the channel to break, and then the bigger entries are going to be, you're actually in an uptrend here, so you could buy. If it came back and you got one of these ideal setups, I guess, comes back into here, spills back in here, but it doesn't look like you make it there on time now. But it could spill out of this. It's almost more likely it spills out of this and crushes into this top. I think you could get at this price maybe. If you're lucky, it comes back to this price. And then you would have to say, well, there's a, if you go off this top here, you see how it's a doji here, this would be your next support level. So you have to build like a channel envelope. You can't just go with one. So here's the double bottom rollover here. So you have like channels within channels, but this is just like a channel envelope kind of thing. Okay, I'm looking at the 4 hour, and it hasn't taken out the 4 hour candles, so we're still quiet, and I guess we're just waiting for that open. Now here's where it could go smashing down right now, and this is always a high probability where they just, everybody's like, well, I guess nobody's interested, smash. So it's the waiting game. Here it looks like a good setup, but it really doesn't mean anything. I mean, if they take this trend line out, then it's just going to go, it's going to go through the floor. But if you're only projecting up to the top of this window, it's not like it can't happen. Not like any of this can happen, but it's quiet now. So we're just going to wait again for this to go through its cycle of boredom. It looks here, the 4 hour looks good. It did take out the 4 hour here, but it didn't on this other broker. He's got a different closing price. Yeah. Daily still triangulating, so no telling how the week would end up here. You could still take out this trend line and spill back all the way to here, all the way back to starting gate again. But you're just on these scalp things, the jury comes in pretty quick. Just waiting for a resolution here. Well, this would have been the buy for a robot. He would have bought this inverted for a bull bot, or just a chaos bot would have bought this and had a sell stop there. He'd still be long, or at least maybe he just took a few pips. The targets are pretty small. When the market's quiet, the targets are small too, but once they resolve this bigger time frame, is when you'd see the big run to here, and maybe you just have one of those typical things where they just once they get to this thing, they're going to come back to here on the closing top. take that doji forward. So we have to cut through there, and maybe just cut up there, grab, come back. You trade in both directions, you know. It's a lot more. At least you're getting both sides of that. I guess you're making more money if you're waiting for the quiet times to get in, because you don't have to go to another currency or another. You just keep your. In other words, you got the sell limits up here. You're long into it. There's going to be a kickback up here of some magnitude, and it's just about, I guess, waiting. Unfortunately, that's the problem. And you might be waiting for a smash back to here right now. So if you didn't get filled on your buy stops on the top of these wicks, you're not committed to that side of the market right now. You're just waiting for either to happen, or you have the sell stops here, and you're going to ride it back into this. So as time ticks along here, you have to figure out time frame wise if this is the 1 hour, and still got a double. We're still climbing up this. If it holds this trend line on the 1 hour, I guess it's right at the edge. So at this point, it could go either way because it's getting too quiet. Something's wrong. Red alert. So either sell here with a stop above this, or just don't touch it and let it stop you out. Get filled on the limits down here. And then if you launch your buy limits here, this is a 1 hour buy limit. Launch them here on the daily and see if they make sense, because sometimes when you launch them on the daily, you realize that the market comes slamming all the way to here today. And this is something that people don't see coming, is that you could come all the way down to here today on the British pound for no apparent reason and just bounce up. And it wouldn't be that. If you look back in time in the big picture, you'd see it'd just be a wick. I mean, when you're projecting huge moves in the market that may take 5, 10, 20 days, and then you just think about a wick on a daily and thinking that that's your whole trade, I mean, that's crazy. But I guess it's my favorite trade because you're just in it. It's just completely in and out, boom. And so here's a buy stop situation. You don't have a choice here. It's holding this, and you're on the bottom of the hour. So here comes the half-hour traders, the half-hour robots. So if you go to the half-hour chart right now, it's got to hold this line for sure. This is like a quadruple bottom there. You're right at that bottom now. So got to pop up here. Start going after those bearish stops, and then trap the bulls on their stops, and this is your exit. So this has got to be your exit, but I'm giving my exit window like up in here. But this is like, it's just a frantic move, get the hell out, and then if I get out before my targets, because I could see that this is just a trap, that I would put buy limits in anywhere below here, expecting it to come back in here and now start cleaning into all this thing, and it just becomes this insane battle of this insane volatility that just starts to I'm sure for anybody that's trading super tight, they just start stopping people out or stopping them in if it's a breakout entry. But that is such a short-lived profit when the market starts to just vibrate up and down, because you're just getting chopped to death. But some of these setups are just like, I mean, it takes 8 hours for this one to form. I'm looking at there's an 8 hour, two 4-hour hammers on the 4 hour right now. So you're looking at 8 hours to get this signal, so to speak, I've either buy at the market here with a tight stop, or just start stacking up buy stops and sell stops below these two fractals. And the typical thing is people would put a sell stop here on this bottom, this valley, and the peak here, and buy stop. So you're getting in before it takes out this, and you're also getting short before it gets to this point. But maybe that's your scalp take profit. Maybe you've got the thing about buy stop entries, you can have super tight stops on that, or you can have wider stops. But you're really at the apex of the getting on this train either way here. But they're always going to do this breakout, kickback, wick down into here, and then really go up. That's always on the table. That's almost the guaranteed move. Is the oh really, you think it's going up? So there's totally big slam up, but this this goes down back into this doji. For a lot of people are getting out in that doji down there. Okay, this just went into psycho zoom mode on me. I don't understand why there's not a setting for the rate of zoom on this poor recorder. I guess that costs extra. But yeah, this is the same story over again. Big, indecision, and you're just a couple moments from taking out this double top. These two mountain peaks. So this is the thing. I could take these two peaks out, and it's not hard to picture that. At least this is your first target, and then you got to figure. Sure, it comes back here, and you start buying at this top now. So if you really want to take advantage of every zigzag, it's going to look like you're going to be dumping, not that you're selling, but you're getting out of your profits, and then you're going to reload on pullbacks, or you're just going to sit here and wait to get stopped out of this whole thing where you're trying to get on before it leaves the station. So the problem with buying at the market or getting in too big at on the train before it leaves the station is that it could reverse at any moment. The train could just be backing up to get to the switcher. If you've ever been on a train, I guess, I've been on certain things where they actually back it up and then it goes the other way. So, I mean, it's almost like it's got to set. It's got to get a reset, or it's got to get the, it's just kind of like a adjustment before the move. It's just queuing itself. So here we're breaking this trend line down. So now we can come smashing down. So now you have to be prepared to buy a plunge now. So I'm going to get pretty aggressive here. So there's 15-minute buy limits now. So if they stop me out, I still want to get on this fractal here. So and I'm waiting another half hour and put buy stops in. So as it's coming back, I'm going to ratchet in with buy stops on top, so that when it if it takes off up, it's going to take me in. It's going to pull me into the mix. And so this would be 15 minutes here. This is a half hours. I don't think we're coming down here in an hour, but we could come down there in 1 hour. Okay, so I pretty much want to buy as much as I can right up out of here. Real bullish. I'm going to start putting buy stops in now. If I'm not in big enough on these orders, so this is where you have to gauge it. Like, if these orders are really big, you're already in too big. So you have to wait for them to stop you out and get in at a deeper price that would be better for the trap of the bears before they really do rip it up. So you're always going to see that possible behavior like this. But after a half an hour, and they're only able to take it back to, say, if they just pop it below here, right, and just grab that, make a wick into this 50 pip grid number, you just it's definitely the better price. here are these 15-minute orders. So on a half-hour chart, I'm only giving this 15 minutes to spike down. At the end, if it's down here, I'm putting buy stops in on top. So I'm just going to go with the breeze. If it kicks off to the north here, you still got about, I don't know, an hour, 2 hours, 3 hours. You got about 5 hours of really insane pricing coming in now. You're going to see these people think it's not worth anything and then think it's worth the moon and then think it's not worth anything. Very different opinions, just very quick change of opinions. But all it does is plot the behavior on the market, and then I guess you really when you look at a chart, I guess you're looking at momentum, because otherwise you'd just be looking at a spreadsheet of numbers and you just say, oh, looks like it's in a range. But here it's giving you the the patterns that people get all excited about is really nothing more than just the decay rate of an explosion and in price, or the ramp up of the explosion. So you're either looking at that, and then there's all the little aftershocks in between, and then it gets really looking like noise on small time frames, because it's just too it's a static market. So really the way it sets up, it's a matter of the market finding its own center, and then of course once it's content, then it's going to have to, if it's overly content, it's going to have to explode. So still waiting for the pullback here, or possible explosion north. But it's kind of silly, and here looks like a possible explosion north. But like I said, since I'm pretty heavy on these stop orders, sitting above these, now I got 3 peaks. So the half hour, of course, it's a confirmed peak because you closed last half hour, right? So now you can draw this trend line. Looking to break this trend line on this double top, and so the triangles are very much like a big debate. But there's more free. It seems like there's more void to the north than there is to the south on here. We've already been down here, done that. Now, like I said, not like you can't smash down here later on today. Like you could pop up here, trap this, and then rip all the way back to here today. Ricochet off this. So having all these multiple scenarios on one currency spread over a bunch of different price levels seems like a lot less risk than trying to scalp. You couldn't hardly scalp 2 currency pairs or even really trade them properly unless you have a person to trade each instrument. I just don't know how people do it. Can you play bass guitar and guitar at the same time? Sure, get a double neck guitar, right? The idea that you're going to play all these instruments, and you're really fooling yourself, because it's all about how many pips, right? Because if you trade the guppy, you're looking to risk a lot of pips and make a lot of pips, but all the markets are the same. Every market's the same. There's no difference. You could look at the corn market. You could go to a corn market and go to any market, any data set, and it's going to have like times when it looks like it's in a trend, and times it looks like it's exploding up and down, or it's even just quietly doing nothing. And so the behavior, is, every sell-off looks the same. Every rally looks the same. A big sell-off and a big rally look the same. And the magnitude really is just about the time frame. If you go to a smaller magnitude, watching NFP or something, my God, 300 pips in a minute. It looks insane. You can hardly put it's hard to do Ikamusha cloud on a 1 minute chart where your data set only goes back 40 bars or something, so some of that stuff is just ridiculous. It's just keeping you from over trading. So that's why I think this doji entry, a doji strategy, is your volatility breakout system, and that's just how it is, and it has its inherent problems. Just like you can't take your Porsche into the woods, but you can take your SUV into the woods. So you build a system that the SUV is more of a limit order entry, and the I guess your streetcar is your stop entry market orders. You're just punching the throttle there. You take your money and run. Whereas these rugged, wide limit order entries are going to be always the the kind of you have to either place them manually at the pivots, or you're going to canvas a whole area with a retracement strategy, a retracement concept of buy low, sell high. You're buying 200 pips deep with a 50 pip stop to make 150 pips in either one ticket, or you have a whole lattice of bizarre offset, no repeat of any orders, and just like a big cage, just a big bizarre maze of orders. And that's the what I like to do. And now you could do that on multiple currency pairs, but you still have to pick like the realistic plunge of a market. You can't put orders 1,000 pips deep, say on the euro dollar, unless the euro dollar's been trading in a 500 pip range for the last maybe 3 days. Each day is like 500 pips. It's unrealistic to expect the market to go 500 pips a day for 10 days if the the monthly range is X, right? So yeah, realistic entries, and certainly if you're going to babysit the market, you trade market orders, and you have to be taking scalps along the way, and maybe not even stop order entries if you're on a super small time frame, because you can see it coming. You can see where your buy stop is about to get filled. You want to be in before that. So this I'm already selling here. I'm already to bail on this trade already. So now it's a problem because now it's a sell. So it's always a sell, it's a buy, it's a buy, it's a sell. So how long are you going to wait in this thing for it to pay off? That's the whole issue. And to ruin the fear of missing out, just look at any chart. You're going to see like either 1 or 2 retests, maybe 5. So it's not like you can't get back in this thing. I mean, if you just kept buying at this round down here, you bought here, you rebought. I mean, those are amazing bounces. That was just, even if you have, say, 50 pip stop to make 100 pips, and but you just have a bunch of orders that start here, and you just have a cluster. But you recluster, you reload, and it gets even better. This is even a stronger move because it's a bigger trap. The bigger the trap, so this is the cause for this giant effect. And when they go after this, it becomes this thing where it kind of leaves people's heads spinning. If they have the idea of what's going to happen, this is really disturbing. Like here, it starts going up, and then you're like, "Oh God, really? It's going to come back to here again?" Yeah, I'm sorry, but this has to come back to. And this is the big deal because on the 1 hour, 30 minute, and the 1 hour, you can see it on the 1 hour. There's only one. You're missing that last retest. Well, you see it show up here perfectly on the half hour. So this is like the backbeat, or this is the double touch there. Just go to the 1 hour. So this is pretty much you can sync that 1 hour to the half hour almost pretty good, and that's kind of and now we're looking for these. Okay, so they're coming after this wick here. They got to punch through this thing, or I'm getting the hell out. So they were right up on the window here. Got to clip this, and the way it clips through that's going to matter too. So maybe at the top of the hour, we're cutting through this inverted hammer, and we go smashing up into the targets, which would be ideally right a bracketing of this bodies. If you just cordon off the bodies, and so that window there is going to be a real target and a reversal figure. Okay, so we just took out last hour. So we took out last hour. Now we got to take out 2 hours ago, and then that should be the scalp, or you can just get the hell out now because they just trapped people on this. So it's very it's always like this. This is just how it is. They just trap these guys, right? Oh, so the robots are getting in there, or people, and stop entry people, right? But you don't want to be a stop entry guy on the 1 hour. You want to be a stop entry guy here, where you buy this, or you're buying at the market that doji. These two dojis on the 15. You're already long, ready to dump. So I could sell right here. Everything I'm long on. From the middle of the fair value zone, because I realized that another 2 hours may come. We know 2 hours of debating this price zone. Still going to smash back retest. So if the scalps are always higher probability because in shorter time and less risky, but the targets aren't that great. But these big swing trades, I mean, at least you're making some kind of money if you're just sitting in front of the computer. Okay, so we got some follow through here now. We got to go cutting north here, chop out that wick, spike to these yellows, and then boom, come back with limits possibly. No buy stops from here on out unless the market gets quiet, because otherwise you're just kind of chasing into it. I think you're chasing it if it's already on fire and you're getting it at the market, unless you have wide stops on that. It's gonna get crazy, and you could just have it scream up and down, 50 pips up, 50 pips down, and you're just like, you can't even. There's no window to get in, so you had to get in before, take a position. That's why the bracket entry stop, even a bidirectional no trend kind of stop entry, is always going to make. Well, it's going to be a better risk-to-reward ratio, because you're going to maybe put a 5-10 pip stop to make 50 pips because you're expecting a big explosion. Whereas the limit orders, those are very, that's kind of a scenario-based thing. I mean, because you're living in the price right now. So if you have buy stop and sell stops and you keep punching the key, you're living in this current time moment. But the future, you don't know. So it could go smashing up or smashing down. So I guess it's two different mindsets to be trading at the market, because you're just like, okay, I'm selling here because it's a resistance on this 15 minute. So here comes the sellers. They're going to keep selling here, and the buyers are going to keep buying down here. But I guess it's in the end, it's about how big you're in this thing. Because if you're not comfortable with watching the equity just keep bobbing up and down. So here we have to resolve this 15-minute triangle now. That's the current state of affairs, and I'm aware of the wicks, but to me it's about price over time. It's hard to see a triangle in those wicks. You really can't see what's going on time-wise. So that's a big deal. And then you can always connect all of these. You can even draw lines through this top, through this doji. So you can see I already cleared this here now. Possible smash down all the way down into here again. I guess the next here's a great top becomes a bottom on the 15. Doesn't get better than that, just below the 50-yard line. And you see it's a 25, and this is the 100-yard line. It's the end zone here. Look at this amazing double bottom right on the 15. So it's very conspiratorial. These markets are manipulated, obviously. And people seem to like to create head and shoulders down here just to trick all the retail traders. That really inverted head and shoulders really do work after all. Sorry to tell you. This situation where they trap them here. 2 wicks trapped into that sell trap and just all the bears are like, wait a minute, it's supposed to go down. And here, wow, okay, here comes the big moment of truth. Top of the hour's coming. I don't know, it's getting all squirrely now. So the jury's gonna come in here. Let's see if we're right or wrong. Don't want to overload the wagon on these kind of setups. But we could go flying. Now it's getting this target seems more realistic now because it's taking so long to unfold here. But you can get carried away drawing a bunch of lines on here. That's another problem. But at least you got something to do. I guess the Andrews pitchfork, the middle tine is something like this. If you're going to presuppose this channel, say here, cut off this head, just go through this last known here. But you're looking at the rate of change on like a like this. So it's got the bull scenarios, we're crawling up these channels. The bear scenario is that we're going, everything is going down, and it's where do you get in? This double top becomes a bottom. Drag that up. We gotta sell. We gotta have it start to fail at that, and that's conservative. The radical projection is to go with a steeper line. You're saying stuff like, well, it's going to hit this and tank. Well, maybe come up here, right? Maybe come up here and then tank. But so if it holds that, then you're saying, well, my target's got to be down here. So if you draw both scenarios, sell here, it comes down here, and you get out here. This is the bear's targets. They're saying, oh, it's going to come here, it's going to come down there, I'll buy it here, maybe buy it here, retest there. Or it's like the bull's argument is it's coming up here. So, just got to wait for the jury to come in. It seems like they're out there, they're out drinking again. Okay, this happens, you know. Not everybody can be sober, you know. But hey, you know, it doesn't get any more boring than this. Seriously. This looks like a great pattern here, but you got problems because you could come back and retest even this top, which is not very south. So I'll put some buy limits down there. So this is my 1 hour orders, which probably wouldn't get filled. But during the news cycle, this trade right here, now this is my kind of stacked compression entry where buy, and then buy a denser pack at the bottom. But here's like a linear kind of thing. I staggered these so that it's just, if the market's kind of chaotic, your orders, your placement has to be kind of chaotic. I figure, you know, it's like if you're gonna buy a lottery ticket, let the computer pick it because that's what's gonna pick it in the end. So, but yeah, it's boring, you know, especially this time of day, and I could just go to sleep at any minute here. No, actually, I can't sleep, so I decided to get up and scalp. But it doesn't matter which market. It only matters how volatile that market is. So if you wanted to trade, say, really small, you want to trade an instrument that has a low ATR. And if you like giant swing trades, and you're already trading instead of trading twice the size as far as lot size, just go to a currency that has wider swings, because all the setups are the same. And if you're looking to make 300 pips a day, you're going to go to some wild pairs, you know. Go to these really outlandish New Zealand dollar against the Turkish lira, you know, this wackadoodle stuff. All right. This should be the moment of truth here. The FAR looks better than the 15. 15 looks like it's just ranging. So, okay, I'll come back here and top of the hour. 4 minutes, it should explode up. Got 1 minute to go here before the top of the hour, and they're banging up on this resistance. So here's another window of possible sell off because it's overbought on the 15. So you don't really have to look down at any, I guess you could, but all indicators would be a little bit overbought here. So anybody that wants to try to sell overbought is probably thinking, yeah, it's a good place to sell here, and it goes up and down. Okay, 30 seconds. I don't know if there's news coming out, but I'm just looking for it to pop up here. First take profit is just above these treetops. So it's 15 seconds to go, I think. I don't know if this thing's timed right. So there's usually a big rush here, 5 seconds. We'll just take this buy scalp, take the money, run, and then try to get in on pullbacks. See, now sellers come in right now, so a lot of people are getting out, and there's people that bought down here. My God, they're just gonna sell right now. It's like, forget about it. It's over. So I don't know what's coming. I didn't look at the news thing, but it doesn't care. It doesn't matter. That's another one of these things. I mean, if you got stops in there, if you're in that big, then it doesn't matter, right? I mean, in other words, whatever you did wrong is going to be revealed. If you have too many orders in the market pending, it's just going to fill faster. So if you have 300 pip deep orders that are 8 hours long, well, if the market drops in 15 minutes, 300 pips, then that trade's just going to come at you faster. But it wouldn't change the fact that that's a good support level. If that really is, then it's just how fast the trade unfolded, really. And these things can really go fast, and then it goes pausing, and then... But usually right now there's a scramble, because the U.S. is going to open pretty soon. Crude oil's really cheap. All the markets are right on the edge of, everything's on the edge, so... when the money has to go somewhere, it's going to spill into the next void that's been forming. This British pound's definitely been on the weekly. You're looking at complete wow. So if British pound goes up and dollar goes down, people are buying crude oil here. Geez, it's cheap. I just can't believe how cheap it is. But okay, so now we just trapped the bulls right there. So a lot of people just got out there. They just sold that, and that's why you get that real quick spike like that and pulls back. So gotta wait 5 more minutes. Wait for the 5-minute traders to get on the train. So you can see what they're thinking is that this is actually a triple top to them, kind of a horizontal triple top, where the 15-minute traders don't see it that way. But here's just a nice wall of resistance here. Triple top on the 5. Come back. You gotta get some follow through, but see, it went slightly above this one, pulled back. You see this window here. You see how they run this thing so tight. I mean, if you're really good at placing orders, which you just place them on the very edge there, but look at this thing. I don't know what the spread was during this moment in time, but yeah, it's like 1 pip and then down. Then here, new high, back down, and just again, new high, back down. So look at how it lines up to this. So, and it's also the 25-yard line. So if you're looking to make 25 pips and you sell here with a stop here, 5 pip stop, 8 pip stop, if you're drilled in this tight to the market, these are like, this is like when you break the bull balls and you end up with a ball right near the, look at this wick here. Now this goes back far. This is a 15-minute chart, so this could be the top of a 1-hour wick somewhere. You really want to be like thinking about that window, but there's still the closing price, which is the average price. That's always the average price. The average going rate is this 1 period moving average, because back here you can just see all this you know, noisy, whatever, it creates the fair value zone of this big thing. You're just stuck in this thing. I mean, you've been stuck in this garbage for, it's been stuck in a 50 and a 25 pip range for the whole night. So this whole thing from, and it's 50 pips. Or this is 25 and 25. So, yeah, it's just, I'm sorry, this is 25 pips. And you're looking to make, if you're looking to make 25 to break even, people, of course everybody's going to bail here on the double bottom of the 5 for the scalp. And then maybe it kicks back to here, people get in. So you're always thinking about, this is the channel that's going to take you into this here, and then there's going to be sell limits on these wicks for the kickback to the 100. But yeah, from here to here's 50. Maybe you bought here with a 10 pip stop. You got out here. You took your 14 pips. You know, you got like, but you got to be believing that this. And here's a 5-minute setup that's. I guess if you look, this is the top inside the bottom trade. Let's zoom in here. But looking back here earlier today, here was the this top. If you come forward, and then they clipped all these wicks by just a couple pips. Now, when that happens on a 4-hour chart, this could be like, you know, this is a 50 pip window, this is 200 pips of profit. But this stuff happens all the time. Look at the chop into these. You go into this on closing price, you get a triple bottom on wicks, you get the flick back into this big deal price. But it's about how thin you slice this cheese. Double top becomes a bottom on the 5. Now, people are nailing that at the market. Or they got buy limits sitting just super tight back in, but the spread, hell, the spread isn't even that, right? I mean, right now the spread is 1.5 pips, so you wouldn't even get filled if you had buy limits here. You just have to nail at the market and overpay for the spread. Okay, so the spread's still 1.5 pips, but now we're cutting through on close here. You could close above, pull back, in 5 minutes you could be pulled back to here, and then you just really take off. But see, they just went and took that by 1 pip, like a half a pip. They just popped out on that wick. So they're cutting through north here, but that could just be another amazing place for them to sell. But if you look at the 4-hour, it's kind of scary to be selling here. Once they start knocking down those treetops on the larger time frames, then it's going to be a big cut through the north side. Once again, people are getting out here though, taking their money and run. I could get out now and be up on every entry. I'm in profits on everything from here, so I can dump right now, reload. And so if you're trading against, if you have one instrument on 10 brokers, you get out right here on this broker because you got in at a good price on this one broker. The other ones, you bought at the market, or you're still waiting to fill on a plunge, or you don't have any trades on at all because you couldn't get the good price. So you can't really, if you spread across, you always have to think about the bigger picture of all of your money that you have in every broker. This way, one broker is designed to do a certain kind of trade, so I should be selling right now. If I was going to scalp everything here now, as soon as this thing pulls back, I would be losing on everything I gained on this whole zone here. So I'd dump here, reload on limits. If they pull it back, I'm in. So probably, high probability to pull back. So I like the flexibility. Now I don't have to be long on this at all. I'm barely long, but it's okay. The other account is long. So it's almost being long and short at the same time mentally, because you don't have to. So this guy's still long. He's on a bigger time frame. He's going to take more risk. With a scalping account, if you got a bunch of money and you're trading bigger in this account, what's the difference, right? And it doesn't matter if these are giant orders and this thing pulls back and fills back all the way into here. I mean, it's just going to be insane. You're still going to make as much money because you're trading bigger here. You don't have to be on these. You don't have to. You can just get the hell out. Like you see how this whole morning strapped in a 25 pip range. Look at all these stupid easy trades. I mean, it literally just keeps, it's down, it's up, it's down. I mean, you're not making a lot of pips, but you're making, and overall you're making a lot of pips if you can see that range. And then go to the 15, I guess, if you don't want to overtrade it. But every time you come to this trend line, you'd have to buy it at the market if you're here to babysit it. Unless you can imagine placing just place your pending at the last known top, which is back here, and you're just going to get picked up in this stuff. Okay, now the sellers are going to come in here at this double bottom on the 15, and people are taking profits there. It kicks back. Now here's another where they maybe this is the trap. So I pretty much I'm barely in this thing. So here, let me get out everything I'm long on. So I'll take profits, go totally flat here. Now I'm going to buy aggressively on the pullback because you got a whole day ahead of you, hours, right? Anything can happen now. You could come flying back. You could go ripping up. But if you go flat on one broker, then you can just go to the next broker and be like, okay, that thing's all taken care of. And if each broker has its own script and scenario list, and that way you can be organized as far as, okay, I'm only in one currency, but you just know how it is, right? It's going to go up and down. It's going to go up and down. It's just not, this problem is, in the end, it may go up, but I mean, really the ride up and down, who wants that? Right? I mean, who wants to be continually slapped and then, it's like a passive-aggressive relationship, right? Just constantly being abused and, taken to court, and nobody wants that. So yeah, the sellers probably trapped him there. I'm gonna say I'm totally out of this thing. I'm still long on the other broker, and he's on a bigger time frame, smaller orders, but overall same risk, right? Same risk channel, same. We're still waiting for this British pound to really set the world on fire to the north side, but maybe we just ran out of buyers now. So kick back into here, and these are half-hour and 15-minute orders. And I'm just gonna have to wait for that to fill. Here it looks like it's a great bullish story here, or it's pent up to go after these wicks, but yeah, still got a whole few days ahead of us, and this is Wednesday, so you usually get an insane move today. I really don't want to be in too big here, so I'm going to sell everything I'm in here, and I'm going to get back in on limits, and then put all these limits down here and just go back to sleep. It gets pretty boring here this time of day. We still have the 4 hours from now you could be ripping up or down, and if it rips up, then I'll definitely put in a pullback limit order entry. And so I got these orders are underwater, these top ones bought early on the top there. Okay, so I'm out of everything that now I'm going to micromanage this 5-minute chart here. This is a 15, so if you think this is the Andrews pitchfork, then this would be the pivot. There should be resistance up in that, but it's simply just a trap here. Now it's about, okay, I don't want to buy on stops here because it's too high, so I just buy on pullbacks. Just wait for the next 2 hours. But that was definitely the big This 50 pip was banging on that 50. That was a 100 pip from the middle of this doji to the bottom. It's 100. It's a nice symmetrical 200 pip candle there, wick to wick. And trying to leave the station here on the north side. It looks great on the daily, but way overbought on the 15. So just waiting for the look at the 25 pip grid, goes right through the middle of that candle. So these are all 25 pip handles scattered over the body of that. So you just count it. You know, it's just 50, 100, 200, 300 pip, 300 pip day, 400 pip day. Cycle. Or I'm sorry, this is 100, 200 pip day, 250, 50 pip wick. Little 25 pip wick down here at the bottom. Okay, I'm looking for the cycle pullback now. So everybody bailed here. Sellers came in. They trapped the bears. Now it's trying to get in without it pulling back so far that it takes out this trend line now. So if the fair value now is back in the middle of the road here, about maybe right here. But some of these, you have to figure, well, if that's the trend line, you're going to retest buy on the retest entry of that, then you got to take this up to about here, this top. Take this top forward. It's more likely you could get to here. Okay, here comes a big rally. So now I'm going to buy aggressively on pullbacks. And I'm going to buy, I'm expecting a big smash down now. So these trades here, all the brokers, I'm going to start putting tight buy limits in now. So these ones are underwater. They're winning now. And their targets are up at just below the round. And now I'm just going to put really tight buy limits, 5 and 10 pips deep, 20 pips deep, the last 15 minutes and 1 hour, half hour. Then just this thing's going to max out at 1 hour. All the scripts max out at 1 hour, and then the I can put hand placed buy limits I'm putting on this one really deep, so they're 8 hours. Now, if you hand place all the the orders that last more than 2 hours, 4 hours, whatever, because the hotkeys fun to hit the hotkey and just say, okay, just put a spattering orders in there that last up to an hour. But you got to be at the desk, coming to the desk every hour, hitting that order, boom. See how it's doing, boom. And then the ones that are position placed at the key pivots, say all these yellow lines are like 12-hour orders maybe, because you don't want to come back here and keep looking at it. So honestly, I don't see how people could do this on 10 currency pairs. It's a lot of work to trade the 30-minute chart. From, you got 30-minute running of 15, the daily, you times 10 currencies, that's 30 charts you got to look at. And some of this stuff lasts like about 3 minutes, these trades. So you could be scalping a lot bigger, making a lot more money on a 30-minute high probability setup. I just don't see running around like you just you're out shooting deer, you're not shooting elk, deer, and bear at the same time. And I guess, there's a lot of symbols in your platform. And what are you going to put everything up? You trade setups. You're so good at setup trading, And I watch these guys. Again, I watch these empowered trading guys. This guy's saying, well, here's my batting average for the week, and I'm like, man, 80 pip stops. Like, you obviously are swing trading this with predetermined orders, and I don't want to ever lose 80 pips. I guess if you're trading with 80 pip stop to make 1,000, then it's a great trade. But geez, 80 pips just blows my mind when you can make 80 pips with a 20 pip stop, and you could actually put in a 5 pip stop to make 10 pips and just get the hell out of the market. Like, you have a pending order that's 300 pips deep with an 80 pip stop, waiting to get filled on that. I mean, it's just, those are the market doesn't spike all day long. It's pretty much, I mean, baby depth spikes, 20 pips spike, right? But 300 pips sell off. Maybe when the news comes out, but geez. But, these people don't trade the news, so you got to wonder, how does a guy lose 80 pips and, or 40 pips, But of course a scalper is going to have a 10 pip stop, 20 pip stop, but you can place orders just like a scalper. It wouldn't have mattered, like here on the daily chart. You didn't have to be a scalper to see that the scalpers are going to start coming in here, so why not just place your orders down here? Right, you can see the scalpers are going to start coming in here and start like, oh, we got all these orders, woo, and then we're going back the other way, see you buy. I mean, you could have just had to put a penny down here. The day before, here's the closing. You can see where, well, if it keeps going down, it's probably going to go to here and then ricochet off, or it's going to come to here. You could even bought here with a wider stop. So if you want to risk 100 pips, right? That's how it looks. You put a buy limit here, you walk away. But if you're watching this every hour, you're watching it drop, you're throwing in buy limits above the fractals on the 1 hour. Or you have a super deep, now you'd make up for this loss just in this. Or maybe you got 10 pips stop on that. You got stopped out. And you took out 10, you got a 40 pip range there, but when you say one order lost 80 pips, it was probably better to scalp the mini bounces here on the smaller time frame. And you didn't even have to go to that time frame. It would just basically been put in 8 orders with the 10 pip stop on each one. So you don't know how this went down. It'll go out like a zipper. But I can't imagine, like, oh, you put a 300 pip stop. Like, my God. Here, this, even if you bought here, like, you're buying this window here where there's all the stops, and they clear that out. Your scalper day trader, because you caught this window here, we'll say a 20 pip stop. She made 100 pips off a 20 pip stop. That seems a lot more logical, because you could have put 3 orders in here and not filled on one of them, so you're long on 2 of those things, which is really great ratios. Same thing here. Just such a small window up there. Now we're looking to take this out. It's going for it now, so I'm going to buy aggressively on pullbacks. And it's a slow boat. It's a slow ride up here. Okay, so we're inching up, and we've got to smack up into this. Maybe at the bottom of the hour there's news coming out. But you kind of almost tell, you can tell news is about to come out just by looking at the chart. I'm not looking at the news no more. I know 8:30 in the morning, even if there's no news coming out, watch the market at 8:30 in the morning. Market's pre-programmed. I'm not pre-programmed, but there's a lot of people that just naturally have to get out of something at 8:30 in the morning. It's about the markets that are opening. I just watch these people bitching about the London fix on silver. Of course people are fixing markets. What are you, nuts? You think they're going to sit there? Now look, the rally's coming now. So if we smack them in this target in the next 5 minutes, I'm out and I'm going to buy in limits now. So now I'm going to buy on a pullbacks aggressively. So even if this is going up right now, I'm going to put buy limits in. Get in the pullbacks here. Because I'm expecting a pullback. Market's good at that. All right. Coming up into these take profits all the way to that round. So it's a trailing buy limit. 15 minutes on this order. And the thing is, the more money you build into the account, the more outrageous these buy limit scripts get. As far as you can canvas a wider area, because you probably won't get filled on a lot of this stuff. All right. 5 minutes. I'm going to get out. Bottom of the hour. So I think I got out of something here. I'll give this thing about 1 more minute. Pullbacks at any moment. So I guess I am selling. I'm just getting out of my profits, my longs. Yeah, it looks like the British pound's eventually going to go up here, but these are short-lived, exciting rallies here. Okay, 10 seconds. Well, anyways, it's just it's a game for insomniacs tonight. Okay, so it's a big about 14 pips from the finish line. But the pullbacks are vicious. But you got to figure if it's really going up, it's got to come back at some point. Even if it only pulls back in 5 minutes. So if you're really bullish, you're really coming behind it with these buy limits, looking for any kind of relief in the rally. If you're really bearish, I guess you're selling with stops underneath right now. So you're running sell stops as it's going up right now. So you got a 5 minute. This rally right here, you're either selling at the market here, or you have sell stops just under here. So when it pulls back, you can start taking profits. So I'm just going to get the hell out of my winners right now. And then I'm going to look for the vicious pullback now. And then the 1 hour buy limits are going to go on now. So anytime it pulls back now in that 5 minute, I think it's on sale. So I'm going to stack a real lot in here. Okay. Well, that's it. Still waiting for another couple hours of debating this price. And then there's got 3 days left. 3 days, but it's for the end of the week to make a bunch of money here. Pay the rent. Pay all those overpriced bills they've been sending me.